Welcome everyone. This is our Thursday morning production call. We got a good one lined up for y'all today. It's going to be about mortgage protection concept and then the budget that creates the why. And we're going to dig into it. But I always love to start right. This is an hour-long call. Make sure you have your pen and notepads out. You are not going to remember everything we covered. And then the whole point of this, right, is taking a couple of things, 2 to 3 things, and then just applying it to your appointments later today. That is probably the hardest thing, right? We can be on a call and intake all this information, but it's making sure you actually pick something. And that's why we suggest 3 things, right? That way it's not overwhelming. We do not want you to go out and change the way you're doing your entire appointment. We just want you to grab 2 or 3 nuggets, apply it to your business, and it should start helping you help more families. And then anything that does help you, if y'all can post it on Band, it really does help other agents see that. And then so that way they can add it to their appointment. So we're going to get started. Again, we're going to have 2 subjects for y'all. We're going to start with the mortgage protection concept. Again, I want to keep this super interactive. Feel free to unmute, ask questions along this is topic related, right? I want to make sure we answer everything for y'all. On the mortgage protection concept, the reason I really love to dig into this, right? I think as an agent, sometimes we get lost on why we're doing what we're doing. And what I mean by that is what options are you putting together for the family? Very often, I think we want to cover the entire mortgage and we feel we can't help the family, right? Because, hey, this person doesn't, they're 50 years old, they had a heart attack 2 years ago, and I can't get them a policy that's going to cover 280,000. And in that process, I experience an agent gets lost, right? They're like, well, now I'm not going to have anything to show them. And then when we tell you, right, when we tell that agent, hey, you know what? So you're going to be able to show them the equity protection, right? And it's going to be a policy for 10, 15, 20,000. I can already tell there's probably not going to be a sale made just from the reaction of the agent being like, well, this is how are they supposed to cover their mortgage $15,000 with a policy of $15,000 and the mortgage is 280. Right. Like when I instantly I can almost guarantee the agent's not going to go sell that product, right? Or they're not going to have success pitching that to the client because they don't believe, right? That's what I really want to talk about today, right? Is understanding the concept. So if you don't believe that this is going to help them, there's no way you're going to pitch it properly and convince the client, right? Or present it right and have them understand that it's the best product for them. Right. Because and where I go with that, right, is first, I always love to say, y'all have heard me say this a million times, but our job is not to pay off their house. That is not our job. Our job, nowhere in our job description did it say, hey, your job is to get them the full mortgage payoff. If not, you're not doing your job right. Right. Our job is to simply get them the most amount of coverage for the least amount of premium. And then this is the important part, based on their age, health, and budget. We don't control their age, their health, or their budget. Technically we don't decide what we're showing them. Their life did, right? And when you truly understand that, I think then that's when you believe you can help them with whatever product you're going to show them, right? We do not pick product for the client. We find them the most amount of coverage for the least amount of premium based on their age, health, and budget. Other than that, we just know what we have to use based on their age, health, and budget, right? Just because you're the one picking, I have to use Term 100 or Eagle Select or Moo Graded, right? You're not technically picking it, right? You're finding the most amount of coverage for the least amount of premium based on their age, health, and budget. Their life decided what we have to find for them, right? Or have to use for them, better yet, right? And when we truly start understanding that, that's how we get, right? A lot of agents are like, man, how are y'all writing these big policies? Or, why is your APV so much higher than mine? Little things like that, right? It's because we're just finding the most amount of coverage, the least amount of premium based on their age, health, and budget, right? Like I can't say that enough. Your job is not to pay off their entire house. Get them coverage, so, right? So what mortgage protection is, it's a concept, right? So I also want to say this because I think very often it's like, well, where's the mortgage protection policy that I can go look up for that family, Joe? Right? And so there is no policy, right? So in life insurance world, there's only a term and a whole life. That's it. There is no other type of life insurance out there. There is either a term or a whole life. Inside of those, right, you can have your accidentals, your IUL, your whole life, your final expense, whatever the insurance carrier wants to call it. But there is only a whole life or a term. Again, we don't determine which one we're going to use. It's going to be based on their age, health, and budget. What mortgage protection is, it's a concept, right? Like there's not an actual mortgage protection policy. No, there's only a whole life or a term. Mortgage protection is a concept that we teach a family to use to make sure they don't lose the home, right? We're showing them that with a life insurance product, they can get coverage in place so that the day they're not here, or right, if it has living benefits, if they get really sick or something, they're not going to lose the home, right? So we're teaching them through life insurance the concept of mortgage protection. And when you really start to understand this, understand that as an agent, when you're speaking to your clients, they hear it, right? Like, because you're excited about what you can offer, even if it's a $5,000 policy, right? Because you understand the concept is, hey, based on your life, right? Age, health, and budget, I found you something, and I'm excited because the day you're not here, right? Your wife or your husband, right, is or your kids, they're gonna have right 6 months, three months, or the whole house is gonna get paid off. I'm excited to bring this to you, right? And they feel that, I promise you. So my main goal today on mortgage protection is for the agent, right? For y'all to get rid of the feeling of, oh, that's all I can show them, or like I have to go this way, right? Like just if you feel that, I promise you it's because you don't understand the actual concept that we're teaching the client, right? And I just want you to know, if you feel that, it's going to be hard for you to get coverage in place for that family, because again, you're thinking product, right? We it doesn't matter what we show them. Our goal is just to put protection in place, right? So let's dig into that a little bit, right? So the concept of mortgage protection, right? There's a couple of rules of thumbs. Again, these are just places to start, right? So normally, if they're 60 or below, right, we're going to try to use a term. Again, we want to get the most amount of coverage for the least amount of premium, right? If they're 60, 62 and higher, we're already looking at a final expense product, Eagle Select or Living Promise, because we need to get them approved, right? It is so hard to pivot, right? When you show somebody an SBLI, right, term, or you show them a term, right, that maybe they can qualify and they're 65, and you're saying, hey, we can get you $100,000 and it's $150, right? And now the client's super excited, but they've already told you, yes, I have high blood pressure. I've been to the doctor a few times, but I am diabetic. I've lost whatever they're telling you. Look, the odds are that they're probably not going to get approved for a term at 65. It is very, very low, right? And the problem is because in our heads, we're trying to get them the whole house paid off or as much as we can. You've now shown, remember, the client doesn't know any option until you show it to them. And so when you show them $150,000, right, and for $150, and now all of a sudden, right, they get declined, and you have to go back to the original Eagle Select, which what you should have shown them, and it's now $200 for 20,000. Like, good luck pitching that, right? It just makes that pivot very, very, very hard. I'm not saying they're not cases we can get them improved. I'm just saying rule of thumb, right? That's usually why we started off in those areas. And then the other one is let's say they are healthy, they're 50 years old, and we can pay off the entire mortgage. It's still going to be $150. But inside the appointment, we've also uncovered the fact that, hey, they're single, the kids live in a different state, they're not going to, right, they're not keeping the house, they're just going to sell it. That's when we also have to be listening to make sure, right, that we have the right coverage in place. And that's where they feel, again, this is where you get to embrace, like, hey, you know what, we don't need to pay off the whole house. Like, let's look at something smaller. Let's look at a 6 month, a year, 2 years worth of mortgage payments, because your kids that live up in, right, Utah, and you live down in Texas, and you pass away, they're not moving to Texas. So we just need to find something small, right, to make sure that, hey, we have something in place so that they don't lose the house and they can sell it and get all the equity out of it. Right. That's the true concept of mortgage protection. Another one is, right, is when somebody has like a reverse mortgage, or they're like, well, I'm not paying any home, right, I'm not paying anything on my house right now, I pulled out a reverse mortgage, right, my right will get it when I pass. That's also not true, right? So what happens is that kid or whoever's going to keep the house, they have to apply for financing, right, if they want to keep it, because they're still a beneficiary to the home from the bank, right? Now the banks, I hope y'all understand, in a reverse mortgage, the bank's idea is they get to keep the house and sell it. That's what they want, right? Remember, if someone's doing a reverse mortgage, they probably weren't in a good financial position, and that's why they're doing a reverse mortgage. And now all the equity that they've built into the home is going to get lost because the bank said, got them. And then they think like, hey, my kid will be able to step in, but they gotta apply for financing. A small policy for 10,000, 15,000, right, allows the child to have a down payment to refinance the home under their name and now keep the equity that was in the home. Right. Again, there's just so many ways to truly understand what we get to do. Right. Again, we're not trying to pay off the house. Are there some cases we do? Great, but they're very rare, right? They got to be young, healthy, and the mortgage has to be low enough to be able to say, hey, look, I can get you the full 280,000 to pay off the house, right? The whole purpose and the reason we're doing what we're doing is we just want to make sure they don't lose the house. So just understanding that, right, on the mortgage protection. I love to dig in, right? Again, remember, based on their, and Daniel, you got a question, buddy?
Yeah, thanks, man. I've been getting that. Can you go over that just one more time a little bit where the objection is, I don't owe anything on my mortgage. I don't have it. And I've just been getting that recently.
Right. Again, most of the time they're lying if you're talking about when they're booking the appointment. But if you do uncover that it's a reverse mortgage, will usually be the case, right, where they're not making a payment. My best teaching on that is like, hey, well, perfect. What was your payment before your reverse mortgage? Right. And then at least you got something to stand on, right? Because they'll say, well, I used to pay $1,500 a month, right? And now you can teach them, hey, so I'm going to get you again 6 months, blank years, right, worth of mortgage payments for your kids now, because guess what? When you pass away, the bank's ready to take it. Now they're still a beneficiary assigned, but their job is to come in with some money and refinance the house and keep it. If not, the bank is going to take it, right? So just realize that, right, on a reverse mortgage. I think that's one of the tougher ones that I'll hear out there, right? So like when I personally have one of those, I'm like, sweet. What I'm going to do is what I normally see families do is we're going to look at $10,000, $15,000. That's going to allow your kids, right, to have a little lump sum to be able to throw at it and refinance it and keep the house if they want to keep it, sell it, whatever they're going to do. But we don't want the bank to just absorb it, right? And again, that's the whole purpose of that. Did that kind of answer that one? That's really the only time they shouldn't have a payment.
Yeah, yeah, thanks. Yeah, I haven't dug in on I haven't heard the reverse mortgage part of it, but I'm gonna start asking if that's what they mean for sure.
Yeah, yeah.
Yeah.
So the next one, right, is just understanding the concept, the tools that we have in our pockets, right? And I think this is where sometimes we get scared, nervous, or not comfortable with what you're pitching, right? Remember, look, your job, your true job as well, is just to leave the family in a better spot than when you found them. That is the truth, right? Like, not everyone's going to want to spend $150, right? Not everyone can. Some folks, they just won't see the value in it. And it's okay. Your job still as an insurance agent, right, is just to leave them in a better spot than when you found them through some type of insurance product. When you truly understand that, then we have four products that we can help them with, and really like five, right? And again, we're just talking about mortgage protection right now. But basically, right, the two traditional ones, which is a term or a whole life, right? And when I say whole life in that one, we're talking about final expense products, right? Living Promise, Eagle Select, Dignity Solutions. Those are usually the two or three that we use, right? An accidental policy with Mutual of Omaha or Americo, whoever you're using, right? And then either maybe an IUL, right? If they're, I think Jimmy had an appointment yesterday, right, where it's just a single person. They're like, well, what happens, right, if I need help? Well, you know what? Maybe an IUL is a better product. Again, traditionally it's term or whole life, but we have, right, the accidental, the IUL. These are just policies that, again, in the concept that we're teaching them is putting one of these in place is going to leave them in a better place. And that's really all you got to focus on. When you understand that, it makes, I'm telling you, they hear it in your voice. Like, hey, I have a solution for the problem that we have, right? Or that you have, right? And when they hear that, they feel that, it makes it so much easier. One, as an agent, two, I also want y'all to have the confidence that you are providing them the best product for them, right? But the only way you're going to believe that is you got to get rid of, you got to get the concept in your head of I'm supposed to get them a lot of coverage, right? Or I'm supposed to pay off their entire house. That is not your job. Your job is also one of your main jobs is to get them approved. That's going to be one of the hardest things for you to do if you don't understand this either, right? Because you're like, well, let me try this one. Just remember, anytime you're trying a product to get that client covered, you're risking a lot, right? Which is they're going to get declined, and then good luck pivoting, right? They're one now the clients their feelings are hurt, right? They're like, like, man, like why didn't I qualify? And then you're going to go into a whole, well, no, I don't understand. I'm healthy. Give me that, right? And they're 65 or 67, and you try to put them in a term, right? And they're like, no. And now they don't even care about your entire appointment. They're more focused on the fact that they were rejected because they swore they were healthy, right? Again, and the only reason they knew that product, this is the tough pill to swallow as an agent, is because you presented it, right? That was the solution you presented because you were trying to get them the most amount of coverage. I know it sounds against what you sometimes feel, right? And I'm only telling y'all this because I've gone through all these emotions, right? I was trying to do all this stuff and I kept getting declines at some point, or I couldn't pivot with the client. Look, if I sit with the client, the product I show them, it's going to cover them, put coverage in place, and I have left them in a better place, right? The problem with trying to show them some different stuff that maybe they can qualify, you've put in their head an idea that they can get this type of coverage. And then when they get declined, you can't pivot because it doesn't make sense for them, right? Well, you were going to show me 150,000 of coverage for $89, and now you're telling me we're going over here for the whole life for 20,000 and it's $150. Like, I'm sorry, it doesn't make sense to me anymore, right? I don't see the value in it. And then you part ways and no coverage was put in place. That's what should hurt you, right? Is there is no coverage in place right now for the family because there's just too many families out there with no type of coverage, right? Like I love, right, my nephew Jimmy, right? He was going through his appointment yesterday, and the client was 61 or something like that. No coverage in place at all. No coverage in place at all. Right. And she asked a whole bunch of good questions, right? And he presented her the concepts. And now he's like, I didn't realize, right? And then even with his parents, right? He's like, hey, you know what? There's nothing in place at my home either. Right. And he's like, well, but how am I supposed to get them all this coverage? I'm like, listen, you're going to be the beneficiary in this point, right? Think of this. You don't need to pay off the entire house. I go, you just need enough that when they're not there, there's something in place to make sure you're not losing the house that they bought and invested in, and right, and want to leave it to you. And he's like, whoa. As a beneficiary, it's cool to see that as a beneficiary, because again, sometimes we're trying to think of the client and get so much coverage in place, but we're not thinking of the beneficiary, who's the true client, right? The beneficiary is the one that's going to receive the benefit, and they don't need 150,000. They just need something to help them pay for the mortgage. I always tell, when anyone gives me pushback, I tell everyone the story of my dad and my uncle. So when we were little, I think James, I don't know, I think we were like 15 maybe when Grandpa died, right? And my grandparents left my dad the house that they were living in. They had to have lived there, I don't know, almost 10 years in San Antonio, right? Like since we were little, I don't, it had to have been. That means in 10 years, there had to have been like 60, 80 grand at least in equity. And so they left the house to my dad and my uncle, the two oldest. Neither of them could pay the mortgage, the payment. So the bank just came in and gave them exactly what was owed on it. My dad just saw it as at least they take it and I don't owe, right? Because he left it under his name, right? Because they had already done the paperwork and they were on there. My dad was more worried about it was going to ruin his credit. He couldn't afford it, right? And this is not a good spot because my grandfather didn't have any life insurance, right? And I didn't understand none of this when I was 15. And when I started to understand all this stuff, think about this: a $6,000 policy would have made my dad and my uncle, like, there had to have been like 80 grand worth of equity, easily, easily. So think about that, a $6,000 policy on my grandpa. That means if he had gotten it, because he passed in his 70s, if he had gotten it in his even early 60s, it wouldn't have been more than like 40, $50, if that. That policy would have put $80,000 in my dad and my uncle's pocket. Right? That's what we're trying to do. He didn't need to pay off the house. He just needed to make the next three month payments to at least put the house up for sale, get the equity out of it. Right? Like that's what we're truly trying to do. Right? And the reason I'm so passionate about mortgage protection concept, right, is I want y'all to understand what it really is. It is not a term, it's whatever you need to pitch to the client based on their age, health, and budget. And the client truly starts to feel that and understand that when you're asking the right questions and showing them the right product for them. Right. And then guess what? It's going to take a little work. Sometimes you do have to get them out of their own way, right? Because on their behalf, they did see a form that says, hey, you can pay off your entire mortgage. You may qualify for living benefits, right? It's your job to pitch to them, right? And teach them like, hey, well, normally I could, right? But based on your age, and you got to tell them that based on your age, health, and budget, this is what I normally see other families do, right? And the reason I love to use normally what other families do is that takes you off the stage, right? Because then this is what I show them, right? Then they're going to be, well, why are you showing me this? I'm not blank, or I'm not that healthy, right? I'm not that unhealthy. I'm younger. I'm whatever, right? You got to take yourself out of it, because if not, look, they're not going to like the concept maybe, and they're going to look for someone to blame, right? And so you got to remove yourself from that and become a consultant. And a true consultant, right, is you're not showing them what you think, you're showing them what's best for them, and other families in their situation do this. And that's how we get a lot of yeses, right? And doesn't matter what we're pitching them. Most importantly, that's how we get so many policies in place, right? We're really good at teaching the family this is a concept. It doesn't matter. It does not matter. Why I say that on the product is because agents, right? We fall in love with the IUL is the best product. I don't believe in term. I don't believe in whole life, right? If you are thinking of stuff like that, you're not doing the client justice. I don't care what you think, right? It shouldn't matter. Your job is based on their age, health, and budget to show them what's going to be best for them, right? And let's see. really that's the mortgage protection concept. Anyone have any questions from there or experiences, right? Maybe I can help clarify, right? Like, hey, I've done this, I've done that. I thought I could have done, right, something else.
Joe, I've got a question.
Yeah. I was watching you, Robert. I was watching your brain turning over there.
So when presenting equity protection, one of the most common objections is, well, I'm going to reach out to my kids and see what they want to do, right? So you got a single person living in the home, kids are out of state. Obviously, equity protection is the way to go. 6 months, 9 months, 12 months, whatever it is. The most common bounce back that I get is, well, you know what? I'm going to reach out to my daughter and we're going to talk about this, right? What I haven't found the kill shot that effectively counters that.
So we beat it to the punch, right? Because they're all going to tell us that. So before you even get to showing prices, make sure, right? You know, right? Hey, who's the beneficiary? It's going to be my kids. Great. So we already know we're leaning towards that way. So make sure you start asking questions like, well, where do they live? Right. That'll tell you, hey, they're not right. And one of the most common or a good question is do any of them live in the house?
Yeah,
Right.
I ask all that. Yep.
Right.
Ask all that.
And then it's the, hey, would any of them keep the house? Have you had that conversation? So I always ask that one. That usually will get rid of, I need to go talk to them, right? Because now you know that most of the time they're going to tell you no, they're not going to keep the house, right? Unless someone's living there. But based on that, then that gives you the power to say, hey, well, we already know they're not keeping the house. This is what other families do, right? In your situation, they look at blank, blank, blank months, right? So if you don't push that right there, they will give you that one a lot, right? Again, right, there's not much you can do, but I don't get that objection that often. I get it sometimes, but I usually kill it with that. Like, hey, what are they going to do with it? Right? Are they going to move over? No, my kids are right over here and they live their own life and they have this. I'm like, great. So then we don't, right? So I'm reassuring them they're making the right decision there. It's like, hey, great. So then usually other families, I usually see them do anywhere from 6 months to a year. That's all they need. We just need to make sure, right? Just more edifying the fact that there is no other question. I mean, in the reality, right, the kid should automatically say, of course I want you to put this protection in place. Right now it's like, hey, we just need to fit your budget, right? Can you afford 6 months, 9 months, a year's worth, right? And then do we even need a full year's worth, right? You should be able to sell your house in less.
Yeah. Going through all of that and still, at the end, looking at different options, one of the objections that I continue to get is, well, you know what? I need to talk to my daughter and see what she wants to do. She'll make the decision on this.
I would just say put more emphasis then. Maybe you're just saying it too smooth, right? So you got to make that important, right? So if you go through it too smooth, right? Like, okay, so they live where? Okay, great. What would they do with the house? Okay, great. And just keep moving, right? Like spend some time there. Be like, hey, so normally I see families do, right? If they're not going to move in because sounds like they're doing great. Yes, I'm proud of them. They're doing this. That's awesome. So then we're only going to need, right? Start leaning them towards the decision already, right? Hey, we're only going to need anywhere from like 6 months to 9 months. We're not going to need a lot,
Sure.
right? And but I would probably just put a little more energy or emphasis on it. You might just be skimming through it too fast with your questions and going through it to where they're not finding the importance there, because the reality is, again, they don't need to talk to the kid. We've already understood what's going to happen. They've had that conversation before. Now, the only time I do get that objection, and I'm okay with it when they're telling me that, is they're like, you know what? I've never even had that conversation with my kid. Or I don't know, when they're telling me at that front end part. That's the only time maybe I'll lean towards it, but I do a really good job of still pushing like, hey, this is what I normally see families do. We know they're not coming over here, so we're only going to need 6 to maybe 9 months. And so I'm already reassuring them with the idea of they don't need to go have a conversation, because it's really going to be based on their budget, what we're going to put in place.
Correct.
Also, I think, Joe, asking questions, right? Have you ever had somebody pass away close to you? A lot of people have. And they go, okay, well, right, you know what that process looks like. That takes time. It's pretty chaotic, huh? Oh, yeah, man, it's so much work. Okay, well, awesome. Well, your daughter's 3 states over. For her, do you think to, find time off of work, deal with her
That's good.
kids? drive out here, deal with all your stuff, get the house ready. How long do you think that would kind of take her? How would we want to give her to get back to an even keel so she's not hitting the panic button as soon as you pass away? And they'll go, wow, okay, well, either they'll say, I have no idea, or they'll give you a number. And then you can
You've
say,
been
well, I
working with
normally see
James.
families do, right, X, Y, Z. So,
Yeah, so James and Nate are really good at that too, Robert. They basically paint the picture of what's going to happen after someone passes, and then that brings them. Then it almost takes off like, no. I need to make sure they have 9 months worth of coverage, right? So like now you almost take the child out of the picture because now it's just the parent being a parent, right? Like, hey, I need to make sure they have 9 months. I don't need to go consult with them. I want to make sure they have 9 months because you've now painted the picture of, they're going to pass, they're 3 states away, they're going to have to drive over here. That's already a month just with the funeral and them getting to wherever you are at. Now we need to get a real estate agent, right? Now we need to put the house up for sale. So now they're in their head, they start calculating it. And now they're just like, no, they need 9 months, right? So now I don't need to consult with them because I know and I want my kid to have 9 months. So maybe
Right.
that help a little bit too.
Yeah, that makes a lot of sense. How much time do you want to give your daughter? How
Yeah,
much time do you
that's a
want to
good one.
allow your daughter to go through that? Yeah. Okay. Thanks, Nate.
Let us know how that goes.
I will.
Any other questions? Somebody else had their hand up. All right. If not, right, we're going to go into now the budget part, right? And the budget part, again, I just love to I make sure everyone understands the concepts that we're doing, right? How many times can I say concepts in this call today, James? Concepts, right? It's going to be the FIF, right? Just to truly understand what an FIF inside the appointment is, just the financial information form, right? We're just retrieving information. This is where you diagnose your client, right? We cannot prescribe anything to them without diagnosing. Daniel, you got your hand up?
Yeah, sorry. Before moving on to FAF, I had one more question.
Yeah.
Another objection, kind of piggybacking on what Rob said. I've been seeing, not a ton, but like enough where I'd like to know your response. But like the objection is, my kids make more money than I do. Like, you know, they're just great. They're doing great. I don't really think that they like. Do you have any idea what the
Yeah.
conversation could look like?
Yeah. So I tell them, well, do you want them to waste their money on you passing, or do we want to make sure, right, we at least have that covered for them, right? And then again, I go to the most families. Most families don't want to be a burden when they pass, right? So because again, that's the only way they're going to see value. Because guess what? If their kids are great and they make way more money, and right, mom and dad are kind of broke, and right in their head, you are not going to convince them that they need to pay this policy because the kids have more than enough, right? So that really is just they don't find value in it. But what I do is I right, again, not put guilt. Most and really, I tell you as a parent, I would not want to be a burden on my child, right? So very few folks would. So just making sure you do, again, poke that bear and say, hey, look, sounds like your kids are doing great. Most families get this coverage so that they're not a burden, right? And it doesn't cost your child money the day you do pass. It's to make sure you have something in place so that that doesn't happen. Hey, and that means they're well off. We just need something really small, right? We just need a 3 month, a 6 month. That's it, right? Because it sounds like they got you. You're a proud mom and dad right now. It sounds like, yes, I am. Perfect. Then let's just be right, great parents, and we're going to put this in place. This is what I normally see families do in your situation. So that should, again, that'll just at least uncover if it's important to them or not, right? Because if they truly believe their kids are well off and they don't need it, they guess what? They really don't need it. Remember, mortgage protection, the concept is only they only need the coverage also if the house is in danger. That means when they pass away, who's going to be able to step in and take it, right?
There's
So
also a lot of SoundCloud audio for like critical period and stuff. I definitely recommend y'all listening to some of them. Just going to SoundCloud, Symmetry Financial Group, critical period. There's
there's a
like,
lot. There's so many.
and that'll help you too throughout the call to build up the equity as well. So that's how I got good at critical period because I'm like, I mean, I was struggling at first, and it's 75% of our clients. Yeah, I mean. and it'll teach you how to build up the equity. They want to protect the equity, little keywords, key phrases. And as you're read or listening to those SoundCloud audios, I made it a key point to pick one or two things and apply it to my business to the next appointment I did, and that's how I got better. I mean, there's a
Yeah.
whole bunch of it. We can't teach everything in this 1 hour here because you got to do a little bit of homework on this well. So I definitely recommend everybody to listen to some SoundCloud audio on critical period. It'll definitely help y'all out.
Yeah. And again, right, like James said, just take a one-liner, right, and just start adding it. Again, you got to find what's going to work best for you because you have to be okay with asking some of these questions or making some of these statements, right? Because they're a little rude sometimes, right? Again, just even saying that one, Daniel, right? Be like, hey, do you want to be a burden on your kids? That's kind of insulting them, right? When they just told you that the kids are going to be fine, right? So find what's going to work best for you too, right? That's why again, what we always suggest, don't go change your entire appointment. Grab something that really connects with you or that you like the way that you feel you can pitch that properly, right? And then just start adding it and then just find what works best for you, right? So like at this point, me and James, we run our appointments different, same concepts, right? And we use our own phrases that we have gotten really comfortable that come out of our mouths comfortably, right? And just again, we're able to have the emotion for the client, right? And make them feel like, oh, okay, this is, this person's really trying to help me here, right? So that too, right? Don't just grab one thing, try several things. You need to find your groove with all this because there's so many different solutions, especially if you go out and listen to all those SoundCloud audios. That's what we did, right? We just started, let me try this, let me try that. And James being in the office, we would both try something different, but like, hey, I did this, got him. This one, like, oh, they went south really fast, right? The way I asked it made them ask all these other questions, and I didn't have an answer for them. So like, have fun with this stuff too, right? Like, hey, guess what? Practicing, you're gonna mess up a little bit, and it's okay. The really cool part is if they truly want this coverage, you couldn't pitch it wrong, right? Like we're just like the people that really want this, they're going to say yes. They're the easiest appointments, right? We're all this little, right? Discovering these little things that you can do. This is just the ones that were maybe on the fence that you can maybe convince. Again, nothing's guaranteed, right? So have fun with it. But that was a good one too. Anyone else before we move on to budget?
Hey, I got a question for you real quick about the reverse mortgage thing that you taught us about.
Mm-hmm.
When someone signs a reverse mortgage, that means that they're actually signing their house over to the bank. And if they don't, and when they die, the bank gets it unless the kids can get their own mortgage to pay off the rest of it. Is that basically kind of what you were saying?
Correct.
Which I appreciate you explaining that. That was really helpful to me.
Yeah, right. And again, right, every contract's different with every client. There's a whole bunch of random stuff, but that in general, that's what it means because they still tie a beneficiary to the mortgage, right? That person's the one that's supposed to come in and step in, right? So they do got to have that person assigned, but most banks want the child or somebody to jump in. So again, these are just concepts of that. Every contract could be different, right? So don't stick to your guns and hey, no, I'm telling you that's what this is to the client, right? Just if they're going to tell you whatever they have in place, but in general, I just use this. Hey, look, do you want them to have the opportunity to maybe step in? And they're like, well, that would be nice. Sweet. We need 10, 15,000. They're going to have to come up with a down payment to refinance that puppy, right? Because if not, the bank is banking on keeping the house. That is the bank's goal at the end of the day. So,
okay, well, thanks a lot.
Yeah, absolutely. Well, let's dig into budget. Again, right, the FIF, that's what we call it, the concept, right? Understanding that the FIF is the financial information form. This is where we diagnose a client, right? And then understanding we're not talking about the reset, right? I want to make sure, but like, well, I asked the questions at the end, but then you didn't do the budget, right? So we're not talking about the reset where you send it to someone else when you discover something. This is where you discover something, right? And this is where you create the strongest whys, right? Because look, everyone loves their spouses, right? Or their kids. Like we don't have to question that, right? What we have to question is when we're gone, when that person's gone, are they going to be okay? right? Because that's how you do a proper diagnosis. This is also where you discover if are you showing them enough coverage, or maybe you're going to have to pull down, right? You're going to have to lower the coverage because in their budget they can't afford a $200, $150 policy. Like based on their budget, they're barely going to be able to afford a $30 policy, right? And so you have to understand that too. So yes, we prep for appointments, but you got to be ready to pivot. And this is usually where you'll uncover the true pivot that you got to do, right? Of maybe having to change options or what you're showing them. So I'll dig into this part, right? Again, the FIF, the main part is you got to understand their financial situation. Okay. You got to understand their money. So I was actually super proud. I'm going to shout out Jimmy because after his appointment yesterday, he came and he's like, he goes, I think this is going to be a really good appointment, right? Because so he showed him, right? She rebooked him and he booked her for Monday. And he's like, she has 500, she puts $500 a month in her savings, right? And he was breaking down the fact that he knew that after his appointment for me is exciting because that means he broke down her finances, right? Because a little trick I'm going to go over, right, is understanding what they're putting into their savings. So again, the financial part of this is understanding money coming in, and this is simple, right? Money coming in, money coming out, right? And verifying that you've written down the right options and what kind of role play, because they again, this is for me, this was the hardest thing to ask another male, right? It was just for me, it felt disrespectful, right? Of saying, hey, Eduardo, let's talk about your money. How much do you make? How much money do you that comes in a month? Right? Like how much is in your savings account? What do you pay for your phone bill? What do you pay for your credit card? Like for me, I don't even know that about my dad. My dad always taught us you don't ask another male that, right? So for me, it was so disrespectful so I had to get past that, right? Because that's the only way I can truly, truly diagnose somebody. So again, here, this is where you're going to ask them, right? The main questions, y'all can write these down, right? And make sure you use the FIF form. There is nothing like using the FIF form in HQ because it does the math for you. So right? Again, we're going to be asking them how much money's coming in. We're always going to start with money coming in, right? Connie, I'm assuming you still work. Yes. Where do you work? Great. How much money net comes into your house? Well, it's going to be $2,000. Great. Dalton, how much, right? What do you do for work? I'm a firefighter. Awesome. How much money's coming in? Well, 6,000. Okay, perfect. And that's net, correct. Right. So, hey, sounds like, and then you got to reconfirm, right? So y'all are telling me 8,000's coming in between the two of you. Because a very common pushback right there when you say that is like, no, it's usually a little more. Okay, what did we miss? Well, I do this on the side too, right? Or hey, you know what? It's less than that. It doesn't know. It's definitely not 8,000. Sweet. What do we miss? Right. Well, oh, mine. I was telling you, before taxes come home. What actually comes home, it's going to be a little bit less. Connie, right? And then, right, and just understand again, always verifying. Okay, sweet. So are we safe to say $8,000 a month is coming in? Yes, perfect. Okay, so we got $8,000 coming in, and then it's verifying what's going out, and keep that super simple for them, right? Again, these were very uncomfortable questions I had to get past, right? So hey, Daniel, so you're telling me going out? Well, man, I didn't know you were going to need this. It's okay. I'll do the math for you. Just let's break down some of the basic stuff, right? You got to just get them going because if not, you're going to get pushback, right? But hey, so, car payment. No, I don't have a car payment. Great. Perfect. Car insurance. Yep. Yeah, that's about $120. Sweet. Phones, electric bill, water bill. Pushback here that I want y'all to avoid, right? Because this is probably the number one reason as an agent you don't ask these questions is they're going to tell you, well, I haven't gotten my bills yet. Right? That's going to be a very common question if you're working newer leads. Sweet. That's, you know what, Daniel, I hear that all the time. What were you paying at the last house? What were you doing before that? Right? Because they're going to be very similar. Well, this house is a little bit bigger. No worries. We'll add about $50. Right? 100. So electric used to be 150. We're going to go with 200. You feel safe saying 200? Yeah, that should sound about right. Again, right? Sometimes they just need a little nudge to give you a number. Right? So 200 for the electric bill, water, that's 50, trash. Sometimes if it's too small, right? You got to give them ideas because they're probably lying to you if they only told you they have 3 bills. right? Like everyone's got internet, phone, credit cards, car insurance, right? If you're not getting those basics, like they're lying to you, right? Everyone has these things. You got to make sure you're digging a little bit. And then all of a sudden, in fact, it goes the other way, and you're like, oh shit, they got a lot of debt. Right? Like, yep. And then we got my phone bill. Then we have, I help my kids and I pay them this blank a month, and everything going out. Then you total that puppy. If 8 was coming in, and hey, you know what, Daniel, it looks like going out. So it's going to be about $5,000 with everything going out. Does that sound about right? I mean, I guess before grocery. Well, no. Let's add grocery. What do you think you're spending grocery and gas, right? Like get that number as tight as possible, because it's going to be the superpower of creating that why, right? And then okay, so we're gonna go to 6,000. We'll add another $1,000 for groceries. I wish I could have a budget for $1,000. I'd be rich, James. My kids eat too much or something. So, right. So now it's 6,000 going out, 8,000 coming in, right? So it sounds like, and again, I'm confirming all the numbers. So it sounds like 2,000 is left over. Does that sound about right, Daniel, now? And they're like, yeah, we're pretty close to there. Okay, perfect. How much, and this is the magic question right here. How much is going into savings? Well, I wish I put into savings. I just bought the house. I'm like, yeah, that's pretty normal, right? We're getting our furniture and stuff. Normally, what goes into your savings account? What do you try to put in there? You got to get this number out. You got to force them. The reason they don't want to give you this number, I want y'all to understand this, they're embarrassed. Okay. Before I had got my finances, I put almost zero in my savings account. So I'll tell you all the real, right? I'm telling you all the real. I had very, very little savings in my account. Okay, that's just reality. Most folks are the same, right? So you got to allow for them to be embarrassed here, right? And have a little, right? And let them protect themselves. Hey, let's just put a number. What do you think? What do you think normally, right? What do you want to put into it? And then if they're pushing back, I don't know, make them feel good, right? Because again, they're embarrassed to tell you. Think about this: a full-grown man working, right? A woman working with kids, just bought a house. You're making them say, I'm only saving $100 a month or $200 a month. They are embarrassed, and you have to know that, right? And so a great way is, hey, you know what? I've always saved a lot less than I wish. Sometimes I'm only able to put $100, $200 a month. And then all of a sudden, when you make yourself real, right? It's the whole rapport. I make a deposit before I make a withdrawal. Yeah, you know what? We're pretty close to that. I think we do 300. I'm like, well, y'all are better than me because I only get to put 200, right? Yeah. We probably do about 300, 350 on a good month, but we do about 300. Great. The reason why you need that savings, that almost tells you what they can do with a policy, right? What their monthly premium can be, right? You can do, I would start looking at around half of whatever they tell you they put in their savings, right? If they're not putting anything into the savings, realize the odds of you writing an app right there are going to be hard. They just don't have it in their budget. You literally know that, right? Because after all expenses, there is nothing left over. But like this one, right? We know we have $2,000 after all bills paid. And we know $300 a month is going into savings, right? So like, I feel comfortable even saying, hey, I'm going to show you something for $300 because it sounds like you have 2,000 left over. You're going to have 1,700 left over after a policy that's going to take care of all your debt here, right? With your house, right? So like, you just make sure you, again, position yourself strong enough to where you are comfortable to answer this, because you need to be able to get off that appointment blown. Again, you're not always going to get a yes. But when you get off of if you did a proper FIF, right, you got their budget well, when you get off the appointment, you should be like, holy cow, they're crazy. Why do I say that? Because you should be able to say, like, I just don't get it, right? Like Daniel brings in $8,000 a month and his wife brings in 2,000, right? Like their bills going out a month are 5,000. They only have 3,000 in their savings because they just bought the house. Like they don't even have a month's worth of shit. Like he's gone tomorrow. She can't afford next month. again, it's not your job to make them say yes, but you should be. That's the feeling. That's how you know you're doing your job. You should get off that appointment and be like, this is great. Like they're crazy. Like, I hope something good happens for them and they figure that out because they are not in a good financial spot. That's how you know, right? So just understand if you did a proper FIF, you should feel that, right? If you don't feel that, if they're able to tell you, well, let me check my budget and me and my wife will talk to see if it's something we can afford. Like what? No. You should be able to say, hey, Daniel, I just want to make sure I service y'all properly, right? Like we did go over your budget. You got 2,000 left. Again, I'm going to tell them right there and then. There is nothing for them to think about. Daniel, we said 2,000. Did something change? Is there something I need to add to the budget? No, that's about right. Great. And then we're putting 300 into savings and I'm showing you something for 150. Both of you are going to have the entire house paid off, right? You can continue to put these $300 in the bank account and in a year, it's only going to be 3,600 or whatever it's going to be. And if something happens in the next 5 years, we can pay off the entire house. I just want to understand, right? Did I explain that properly? And they're like, yeah, and then that's when it comes out. Yeah, we just don't see we need this. Great. Right? Not everyone believes in this, and that is not your job. Your job is to just properly know their budget and be able to say those type of statements. Right? Like I was so proud of Jimmy. He came over here and goes, holy cow, she's 61. She has no life insurance. She has a little one through work. I mean, he knew everything about her budget. It was super cool. Right? Like be able to have that positioning by their budget because that's the only way you can properly show them what you need. It'll also teach you if you got to pivot, right? If they were still young and you were showing them the full mortgage and you were going to show them something for $150 or you were excited because they were young and you were going to show them a return of premium, which is $120, right? And you're like, sweet, I'm going to teach them how to save and put protection in place and all this stuff. But then you go through their budget and they only have, right, a couple hundred left over. Well, you can't eat all that up in a policy, right? So then it's like, hey, you know what? I do need to go back to a term and I need to show, right? I need to show this person the cheapest one I can get them, right?
And they'll
Again,
appreciate that too. So if you know their budget's only, hey, I only got $200 left over, you maybe just want to do some accidentals, 30, $40 each, just enough to at least have something in place for now. And then you let them know it's a process too. Like, hey, let's just put these for now. And they're paying off some debt, so they're paying off some credit cards or some other bills. Once we pay off those bills, we could revisit in 6 months to a year, and then we'll look at the other policies you really want as well.
yep.
And they'll
Right,
be
like
like, okay.
you got to have that superpower of that accidental. If it's not in their budget or they don't see value in it, be like, great. Most folks in that situation, they're going to do that. Again, our job is to leave them in a better spot. If they don't see a value in an $80, $150 policy that has living benefits and pays off no matter what, maybe they see value in, hey, $20 to get you 300 grand if you crash of an accident. And they're like, yeah, that makes sense for me. I can see the value in that. Perfect. Right? You put in some little baby accidentals, but you left them in a better place. Right? That is the goal. You left them in a better place. Again, that's your last resort, but that is something you got to have in your back pocket. Right? The reason we have a lot of accidentals is because a lot of people just can't afford more, don't see the value in it, but then that's your last resort, right? You should never always just be selling accidentals, but it is something you should have as ammunition, right? Be able to say, hey, you know what about this? And they're like, that, sign me up for that, right? Because at the end of the day, look, either we're going to pass of an accident or it's a health condition. There's only two ways to go, right? Like it's either or. And what I tell everyone is like, you go spend this at Starbucks, right? You go spend $25 easily every visit at Starbucks. Like there's no way you can't tell me if you cancel one Starbucks visit and that pays $300,000. Well, Joe, what if I don't pass of an accident? Daniel, I'd rather have your wife call me and say, hey, this doesn't pay out. Nope, sorry, it doesn't. Then her call me and say, hey, does that accidental pay out? No, he didn't get it for $20. I would rather have that conversation with my client that they wasted $20 a month and didn't get 300 grand, right? Then they never even put it in place because they did pass of an accident, right? And we could have paid off the entire house with a $25 payment. right? So just again, right? We just want to leave them in a better spot, right? We don't know how they're going to go. So I laugh. I literally laugh when they tell me, "Well, I'm not going to die of an accident." You don't look. Our job is to have tough conversations. Nobody can stand in front of you and tell you, "I'm not going to die of an accident," or "I'm not going to die of a health condition." That is the one thing no one can answer, right? So like you with confidence be able to push back and fight and say, hey, you know what? That that's not true, right? Like we don't know how we're gonna go. And they're like, yeah, but I'm just never, I'm like, didn't we discuss earlier you drive an hour and a half to work every single day? So you're telling me you're on the road 3 hours a day, 5 days a week, sometimes on weekends? They're like, yeah. Earlier we were joking and you said Vegas streets are crazy. Yeah, they're crazy driver. I'm like, sounds like those $20 may be worth it. Yeah, let's go ahead and do that. Right? Like, don't be afraid of, we are leaving them in a better spot, right? Again, that's all we're trying to accomplish. So, right on time. Any questions on, right, the budget, breaking it down, being able to, right? This is where you discover the why and create